Just back from Vegas, and did Nike make a mistake by just doing it? What's up, everybody? Welcome aboard to Bubba's Bottom Line, our weekly edition of what's going on in the world of business and what's going on in the markets. And well, I don't know. I just got back from Vegas, and I will tell you this. Vegas is not the Vegas that I remember. Vegas has become, and I believe that they're starting to overprice themselves out of everything. I mean, when you start paying $8 and $9 for a Coca-Cola at a restaurant, and when you have just ridiculous prices on things, to me, they're overpricing themselves, and they have changed their whole model of business. They've gone from a gambling mecca to where you get, as a player, you get taken care of, and they can't wait to ply you with free food and free booze and whatever else that you want to do when you're out there. And now everything is strictly bottom line by the numbers. And I will tell you, okay, in the casinos I was in, and I was in a few of them, and I've been in many over the thousands of times I've been there, and the period I lived there, it doesn't remind me of the Vegas there was, and I think that they're going to have some problems with the now ability to bet sports all over the country. I think you're going to see more casinos, and I think the ones that are willing to go ahead and take care of the customers, which Nike is not, Nike, which Wynn and the other casinos there are not, I think that those are some of the problems you're starting to see. I mean, I can tell you this, from my experience there, the first words out of every customer service rep were no. Okay, no, we can't do that. No, you can't have a late checkout. And interestingly enough, I was there and had my wife and a friend of mine and his wife, and of course we had a upfront comp. In other words, we had free rooms and things coming in. And all of a sudden, there was a problem. And, of course, the first words were, no, we can't help you, no. And, of course, well, you know me, I've been there enough times to understand the business. But, again, I think that, to me, the overall activity in Las Vegas seemed to be quiet, seemed to be slow. And I think that's always an area where you look for when there may be potential problems in an economy. Now, Friday we had the jobs numbers, and of course they beat on the number, 201,000, but what are we not seeing? We're not seeing enough jobs of ones that pay any real money. We're not seeing the overall progression that I think we should be seeing based on what we think that we're trying to do and based on what markets and equities are doing. Okay, as I said last week, I thought Amazon was a sale when it hit the 2050 or the $1 trillion mark. And of course, it was a pretty damn good sale as it turns out. And I didn't expect it to be that far. So I don't take kudos for making the right call. I make wrong calls. I try to give the best idea of what's going on and what should by probability should happen. Okay. But the jobs number was big. And of course, the wages are not keeping up the pace. And I think that's another issue because, of course, although we keep hearing that there's no inflation, I can tell you this, everything I paid for over the weekend and everything I did, it costs more money. And I think that's one of the things that's a big issue and a big problem that nobody wants to do. And my good friend Danielle DiMartino Booth, who worked for the Federal Reserve back in the day, has said and come out publicly saying you fade the jobs number. They have not done what they're supposed to do. And what's probably going to happen is the geniuses from the Federal Reserve are going to be forced to raise rates here, which they should have done all of the entire time, and they should have kept up. But, of course, they're well behind the curve now, and this is going to create, I think, a much bigger mess. I think really right now we have markets that are really going to be on edge here. You're starting to see a lot of very bearish signals. Now, again, I am not predicting that we go down tomorrow. I'm not predicting that this is the time that the markets break down. I am telling you that this is a warning. This is something that you need to be prepared for mentally and emotionally when it does sell off. Now, that's one of the reasons we run our hedge, and of course, our new hedge program starts on Tuesday, September 11th. There's still a couple of spots. If anybody wants to check it out, you can email me. But at the end of the day, okay, you need to be protected, and you need just to understand that this next sell-off that is coming, and it could be tomorrow, it could be a year from now. I can't tell you when it's going to be here. But you need to be prepared mentally and emotionally to say, okay, I understand that the markets go up 8% year over year, so I'm not going to let myself be forced out or panic out. Of course, the best way is always just to be hedged, but the overall picture looks like it's starting to turn very murky and very bearish. And you're seeing the first big sign that you're seeing here is that the buyers are the retail trade. Okay, retail is never right at the end. The sellers are the commercials, the underneath. That's the guys that are selling, and guys and gals. So that is something that does not make sense either. That does not bode well for a long, enduring bull market. Now, again, we're 10 years into this market, into the most hated market in history, and of course, there are problems starting to perk out here and starting to be brought to bay here. Which none bigger, which we talk about every single day, is how much debt is out there. Okay, we've got student debt at over 1.5 trillion. All right, again, you've got a lot of the politicians from the left trying to talk about socialism and forgiving college debt and for all. Who do you think is going to pay for all that if they start to forgive debt? This is an issue that starts with the banking system and the way that they're allowed to print money. The Federal Reserve, the way that they print money and continue to try to keep interest rates artificially low by suppressing everything. And of course, what do we know when you continue to try to push something down, it eventually explodes the wrong way? Okay, it's like trying to cap a leak. It finds a new spot to leak, and then of course we have a flood. And this is going to be the case. I mean, again, this is something we have talked about right here for the last couple of months. Okay, we don't know when it's going to happen, but we are telling you that the interest rates are going to 3.5% or higher. We are telling you that the dollar is going back to par, and that's probably going to happen by the end of the year. And that combination will most likely create the black swan event that we've been talking about for many, many months here. Now, again, we cannot predict when. There's no way to know when the markets are going to have that event. But we know from history, and history tells us that it's going to happen. Okay. Now, again, I wish I could predict it. I've tried many, many times and not done well with some of the predictions. Because, again, it's much more important to understand and be prepared to react to a market than to try to predict the market. And the other side of being able to react to the market is you will find yourself getting much more success when you react, because you will get a much bigger run typically. If you predict it, you typically will not make as much. So it's important to understand where we are. And when you look around the corner, you look into China. China is collapsing right now. Okay, they've got major, major issues there. They've got a lot less money coming in. Now, again, we're not going to have a tag day for China. We are not going to say that they're going to be poor and go back into the third world nation status. But what we do know is that their GDP numbers were never that accurate, and they're declining rapidly. Their debt, they're in the same debt problem that we are here. And of course, their debt is backed up by a lot of crappy assets as well. So you start to see between emerging markets starting to collapse and China starting to collapse, which is not an emerging market, do you think it's that far? And you'll hear the pundits and the advisors telling you, well, the U.S. is the only safe place to go. One thing we've learned from history is that when the markets are getting flushed globally, nobody wants to go anywhere. You can look for a flow into the U.S. dollar as a safe haven play. That's what you can start to look for, because that's where money goes when they're looking for safety. Okay, and that's one of the issues that we continue to watch, is this major amount of debt that grows each and every day without concern of the people that are supposed to be taking care of us, which is the government. Okay, of course, if you watched any of those Kavanaugh hearings, you had to be embarrassed with who is taking care of our country, okay, and who is taking care of all the things that we need to be done. Because if this is how they react when they're trying to confirm a Supreme Court nominee, and again, I'm not saying that he should be confirmed or he shouldn't be confirmed, but what I'm saying is that if they're going to act like this, trying to take their bat and ball and go home, I think you have to say that these are not the people that we want representing us to determine the rest of our lives, okay? And again, I don't blame either side of the aisle, because I know the other side of the aisle would act very similar, okay? So this is not a left or right issue. This is an issue of watching a bunch of children, okay, that have no idea of how to take care of the American people. They know how to take care of themselves. They know how to line their own pockets without taking care of us. That is a bigger issue that needs to be addressed. And this is where this whole issue of socialism and other things come into play. Okay, but these are people these are supposed to be the adults in the room, the people that are taking care of what we are of our needs, which they have not done a good job. They are not doing a good job. And again, I go to either side of the aisle. I'm not picking a side here, because truthfully, myself personally, I am more in the center to begin with. I think, as we've said time and time again here, I'm more of the libertarian type of politics versus this way right or way left. And I think that President Trump is more in that vein as well. But of course, when you get these major battles on both sides of the aisle, it's just childish. It's just poppycock. It's just silly. But this is what we have to deal with the people that are taking care of, or supposed to be taking care of, this country. In the meantime, this is the Bubba Show. Todd Bubba Horwitz, fresh back from Las Vegas. A little tired, by the way, just in case you were worried about me. But we're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line right after the break. What's up, everybody? You know, I got my new hedging course starting Tuesday, and the new future starting on Wednesday. There's a couple of spots left. If you'd like to get in, let me know. I can email you the links at bubba@bubbatrading.com. Don't forget about our high school investing program. We're really struggling here and could use your help. And if you want to help us out, continue to educate America, you can go to Patreon, patreon.com/Bubba Trading. And of course, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. Now let's get back to Bubba's Bottom Line. Todd Bubba Horwitz. Welcome back, everybody. It is Bubba's Bottom Line, and it is Bubba here, fresh back from Las Vegas and pretty tired. There's a lot of stuff going on there, a lot of trading, a lot of gambling, and a lot of running around. And of course, obviously, my whole schedule changes because I got to start at 2 o'clock in the morning, Las Vegas time. But in the meantime, so markets last week had, a pretty substantial, a little bit of movement, and of course we saw some attempts to sell off. But I texted every day, all right, that there's still buyers out there. There's still money flowing in, and I like to compare the markets today to a boxing match. Okay, and most likely a fixed boxing match. And not that the market is fixed, but typically, if you ever saw the movie Diggstown, the boxer carries a guy for a couple of rounds just to make a good show. And I think that's really what we're seeing is sellers step in, they sell a little bit, and then they let the retail buyers get that last chance. I got to get in. This is my last chance. The dip buyers to step in and buy, and then they sell them a little bit more. But again, we saw it almost all week, even on Friday, when we were starting to get hammered. Okay, the markets came back late, and they did close lower, but that was kind of the pattern each and every day. But I think one of the things you want to look for and look at is the amount of pressure the NASDAQ is now under. They were really under some heavy pressure, And again, we talked about Amazon with these starting to fall off. Apple was down about 4% last week. And again, I am not calling for the end of the world. I am not calling for this major meltdown and that this rally is over. I'm pointing out to you how markets work and how markets function. There are a lot of signs that are very, very careful, that you need to be very, very careful. You know, we're going into the Jewish holiday of Rosh Hashanah and Lashana Tova to those who celebrate. And that starts tonight. So we're going to have light volume tomorrow and on Tuesday, okay? And then a week from Wednesday is Yom Kippur, which is another day that will create and take business away. It's going to be light. So a lot of things can happen here, and there's usually some movement around these holidays. So again, remember, you will have light trade, okay, which could create what we've talked about, that vacuum effect. So be very, very careful, all right, at what you're doing. And again, I urge you to be able to wait to react instead of trying to guess in front. If you've tried to work with these markets, they've been very challenging as they whip around. But I think we have seen the bottoms in gold. Now, I'm not telling you to run out and buy gold tomorrow. We like gold. We believe in owning gold, but we have held up very nicely. And it looks to me that we've made a higher low, 1190 to 1200. So I think that looks very, very good. The dollar, as we talked about earlier, is held at 95 level and is now starting to move up again. Again, don't ever think that markets are going to go straight up or straight down. They're going to have pauses, and then you're going to pick the trend of which way we expect it to go. And we expect the dollar to go higher, and it did hold the 95 level and perfectly is starting to work higher. Oil, again, as we expected, was under some heavy pressure. And again, that rally last week up to 70 was, to me, was just another opportunity to sell it. We can continue to try to believe that there's a big demand for oil. There is not. We have plenty of supply for oil. The weekly EIA report is a crock. Okay. Again, most reports are BS to begin with. All right. And this is no different. You've got the faction of people that want you to believe that we're going to continue to go higher and that we're going to the moon, including some of the major banks, which are always full of crap, and are only trying to get you to believe that they're going higher so that they can sell at higher prices. Again, that is not me making an opinion. That is a factual statement of how the market system works and where the spoofing comes in. And those who have the opportunity to do so usually take full advantage of it all the time. The grain markets were a little bit interesting last week. I think that when you look at them, I think they held up pretty damn well, in my opinion. I think that that's not a concern. I think that we're buyers of grains, and probably at these levels, wheat was under a lot of pressure, and there will be a lot made this week of how much it sold off. Just look at the long-term pattern. It's going up. It's still the strongest of the group, but I think that soybeans have made the low. And somebody asked me last week about next year's crop and planting. I think if it's me, okay, I'm planting soybeans. All right. If it's me, soybeans had the most disastrous year overall, and I think that will change. Again, remember, everybody always kind of goes into the herd, and you start to change over. I think that soybeans is the plant. I think soybeans is what's going on. I think that's where we're looking to go. In the meantime, meats had a good week. As we talked about last week, they had a nice little bit of a pop. Especially hogs came right off the bottom, and of course, there's a lot of talk now about the swine disease in China and what's going to happen. And of course, this will tie right into those tariffs. What are they going to do? All right. Now, again, I don't try to play it from there. I mean, this could create some action, but I'm very much a believer that we were near the bottoms, anyways, as we called it for the last few weeks to begin with. So hogs had a nice move up last week. They moved up about 10%. Right off the bottoms, as we said last Sunday, of where they should. So we look pretty solid there. So I think the ag space looks great. That's the space where my money is going right now as a trader and as an investor. Okay, I'm not adjusting I don't adjust and sell what I own, but new money is going into those areas right now because that's where I believe we're going to see the biggest potential growth and the highest percentage return going forward. So that's what I would be looking as we go forward. And I think that those are extremely areas that we need to look forward into. The cryptocurrencies had a rough week. Now, again, you have got a lot of manipulation in these cryptos, like every other market in the world. Big money can sometimes manipulate. Now, you've got a lot of people that missed out here that want to get in, that are trying to keep the pressure on. You have the SEC not giving the stamp of approval to some of these ETFs, which to me makes absolutely no sense, okay? I mean, if you create an ETF on whatever you create it on, what difference does it make, okay? You've got a exchange backing it up. You've got buyers and sellers exchanging wealth. What difference does it make? But of course, this is always my bugaboo with these guys, is they're trying to figure out how they're going to make their money, okay? Again, I always reference you back to either The Big Short or to Wall Street and to some of the things that happen, in these movies. Obviously, much of it is very much over-exaggerated, but the underlying facts are always true and always have some basis. So I think you want to make sure that you understand that, and you have the from the pundits to the advisors to everybody else trying to keep pressure on these, either because they truly don't believe, or because they have no idea what they're talking about, or because they are trying to keep them low so they can buy them. Now, I will say this to you, that many of the very smartest advisors that I know, or family offices, many of them are buying into the crypto world. I am buying into the crypto world, and full disclosure, still losing money, okay? Again, I do not tell you that you should get in, but I would say, look, anybody should have a couple $100 involved just in case it does hit the lottery ticket. But I do believe that they are real. I do believe that they're spectacular. I do believe, and this is from somebody who didn't believe, and I do believe that if done right and invested in correctly, that you can make money. I'm telling you that you don't want to try to actively trade. I'm telling you that you should look at some and look at some of the less expensive ones that might have an opportunity. And again, I'll give you a couple of names. IOTA, which is one that I do own myself, full disclosure. EOS, I do own that myself. So again, there are others out there, but if you do your due diligence and look for some opportunity, I think you will find a spot that you should get into. Looking forward to this week, I think that we're going to have a market that is going to be relatively quiet. Okay. Now, there were some very bearish signals on the close, and Monday could be a little bit ugly, because here's the problem. We have markets that should be very thin. Okay, that is an issue. Okay, it's always tougher when you have very thin markets. And with the markets opening, Sunday night at 6 Eastern, that could create some problem. Now, I'm not saying it will, but it could be somewhat of an issue. There are some signs out there that we're very close to turning over. Now, they could change, but I think that you want to look there. I think gold looks to be ready to pop a little bit higher. I think the bonds are going to continue to get pummeled. I think the euro currency is going to continue to get pummeled. And again, these are the things that we're looking at that show you between what's going on globally. There's a lot of things that are problematic out there. And we're not looking to create problems. We are looking to move on forward. Okay? So understanding how the markets work is very important to you as an investor. We're going to stop out here for our last break and come back with my commentary after the break. This is Bubba's Bottom Line. Todd Bubba Horowitz. We'll be right back with more after the break. Hey everybody, if you're interested in my hedging or my futures class, I've got a couple of spots left open. It starts Tuesday, September 11th at 6 Eastern, and the futures is on Wednesday, the 12th at 6 Eastern. Send me an email, bob@bubbatrading.com. In the meantime, don't forget about our high school investing program. If you want to help us out, go to Patreon, patreon.com/Bubba Trading. And of course, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. We've got Adam Barata coming back on talking about gold on Thursday. So make sure you check out the show. And now let's get back to Bubba's Bottom Line for my opinion piece. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz, and of course, as you know, I have an opinion. I kind of mix it in throughout, but I always have one that I really like to discuss. And we opened up the show with Just Do It. And of course, this is the 30-year anniversary of the Nike Just Do It campaign. And, you know, everybody's in an uproar about Nike and about using Colin Kaepernick. Well, not everybody, but those who are against what he stands for. And I will say this to you, okay? I don't like Colin Kaepernick. I don't like what he did. I don't like that they kneel for the national anthem. So I am with many of you who believe that way. However, this is the United States of America, and because it is the United States, and because the very people that he is protesting stood up for him, he has that right to do it. Now, Nike also has the right to use whoever they want in their advertising campaign. But I will say this to you. Do you think Nike is a dumb company? And I will say to you that they are not. They are extremely successful. They're first from a left bias place to begin with. But that has nothing to do with it. This is not a left or right issue. This is a money issue because it's always about the money. So you can bet your sweet potatoes that Nike did a lot of research. And who is Nike's client? Okay? Again, Nike's client is not me. Okay? Nike's client is not older, successful people, okay, that are going to be their main clientele. Their clientele is the younger, the millennials, the gangbangers, and those are the ones that support all of this crap. Again, I don't want to make this a political message. I don't like Colin Kaepernick. I don't like what he stands for with the way that he's doing it. I do believe in equal rights. I do believe in everything else. But again, I think the venue is not the right spot to use a protest. I think if you want to protest, then you protest at the correct areas. A football game which should be bipartisan and should be non-political, I don't think is the right place. But Nike, I assure you, has done a lot of research and a lot of financial dollars and cents on whether or not this campaign using Colin Kaepernick is going to hurt them. And I'm saying that they came up with the answer that no, it's not going to. And I don't think it is either, which is what makes chocolate vanilla. We all get a choice. And of course, they are not aiming at me as their client to begin with. Okay. I have not personally bought Nikes for 20 years. Okay. Because Nikes are more for the younger. Okay. That's, you know, the athletes, the whole story. But you can bet that they did the right thing, and they're not concerned. Now, again, I don't like the message that they're sending, but again, that is what makes America the place that we should all want to be, which we are, okay? And respect that everybody has the ability to speak their mind, to do the commercials they want, and everything else. So as much as I disagree with what Nike's doing, I know that it's probably going to be successful because they just did it, and they're a very successful company. So the beauty of America is I don't have to agree, but I can respect the fact that they're entitled to do the way they want it. So I can take nothing away from them. I have to respect what they've done because this is the greatest country in the world, the United States of America. In the meantime, to those who celebrate, Lashana Tova, Happy New Year. May it be fruitful. And I will see everybody tomorrow for Bubba's Daily Update. And, of course, always Bubba's Bottom Line on the weekend. Have a great weekend. Enjoy the rest of it. Enjoy football. Opening day is today. And, as always, I thank everybody. This is Bubba's Bottom Line, Todd Bubba Horwitz. Have a great weekend, everybody. And Happy New Year to those who celebrate. We will see you later.